Well, ladies and gentlemen, my name is Greg Michalowski for ForexLive.com, and this is the September 12th, 2014 week-ending review and preview for the Euro versus US dollar. We may be setting up for a rally next week. I'll tell you why. Before I get into that, let me remind everybody that if you like this video and want to see more of it, just click on the subscribe button here. Also, if you're not new to Forex, or if you haven't heard of ForexLive.com, find that hard to believe, but make sure that you bookmark this page and come back often. This is your place for Forex trading news. All right, let's take a look at the technicals for the Euro versus US dollar as we head into the weekend. We have a few more hours of trading yet, so there is still some time. But I want to start off by taking a look at the weekly chart. And the weekly chart is telling. It's going to set up this perhaps rally that I'm talking about for next week. And specifically what I'm looking at is if you take the 2012 low here in November of 2012, connected to the low here in July of 2013, and connected to the low that we saw in last week's trading just last week. We had 3 points along those lines, and this week, what do? We extended below that trend line. And that should have led to further selling. And indeed, you know, we did go lower compared to that trend line. We reached a low this week of 128.58. But as you can see, we are currently above that trend line. The trend line comes in around the 28, 20, let's call it 30 level, because next week is going to be a little bit higher, but around the 30 level. And we're currently trading at 129.42. So we're above that trend line. And if next week you can imagine that we open up a little bit higher above that trend line, you might expect that we might see buyers come in against that trend line and look for a corrective move to the upside. That is what it's setting up for, or potentially setting up for. Either case, whether it opens up higher or even opens up lower, this line right here where connecting lows off this weekly chart going back 2 years is still in play and is still important. So if we open up below that line next week, I would expect that the trend remains the same and the market moves down. I don't know what's going to happen from a fundamental perspective over the weekend. I don't know, you know, obviously the bias is to the downside here in the euro, so I'm sort of kind of thinking about predicting a correction finally, just from looking at the technicals, looking at the price versus the tools. That's still risky play. Remember, the trend is still to the downside. So, but as long as you can define your risk and limit your risk and take clues from the charts, you have the ability to potentially benefit if the market does indeed reverse. Now let's dig down a little bit further, take a look at the daily chart and see what that chart is telling us. And if we take a look at the daily chart, so it's different look than the weekly chart, although the bias remains to the downside here. But if you look at this chart here, we have this top side trend line, number of different points along the trend line, and we started to accelerate to the downside through here, as you can see. And that acceleration took the price below what it was a channel trend line right here. And when we move below that channel trend line, for all of this week, apart from maybe the last rally to the upside and trading here today, the market stayed below that trend line. That is what? Bearish. That's bearish. Stay below the trend line, it's bearish. Move above it, it's more bullish. We are currently below that trend line. That trend line currently comes in at 129.56. You can imagine on Monday it's going to be somewhere around 129.51. So we're going to need to get above that 51 level to give us a little bit more confidence about that upside, aren't we? And stay above that 51 level. We don't want to see it go to 56 and then come back down below that level. We want to see it stay above that level and move higher. Move away from that 51 level. Move away from that 30 level or so off of the weekly chart as well, and start to build some value or some momentum to the upside. Now, there is a key level above that I have to make you aware of. Just because we get above this level doesn't necessarily mean that we're off and away to the races and going to head all the way up to 132.47. This 50% retracement level is of the move up from the 2008 and set 12 low to the 2014 high. Here it is right here. I put it on the weekly chart here, 130.16.8. If we stay above this trend line on the weekly chart, if we get above this trend line here on the daily chart, we're going to need to still get above that 130.16.8 level and stay above that level. I would expect to see sellers on the first test of that line in next week's trading. But there's going to be a battle going on if we do open higher between the 30 level below, the 129.30 level below, and the 130.16.8 level above. Remember, we do have the vote in Scotland next week. We also have the FOMC interest rate decision as well, which is going to play with the market bias here. If the Fed comes out more dovish, or if Yellen speaks more dovishly, his statement's more dovish, we could see the euro move to the upside on weaker dollar, or corrective dollar. We may see the euro move higher in anticipation of that dovish comments from the FOMC before the decision is made, in which case we could see that market test at 130.16.8 level. And then we'll see what happens during the FOMC. One final look at a chart would be the hourly chart. And off the hourly chart, we in the rally here today, we did stall against a nice resistance level up here, the 200-hour moving average. That level, we haven't been above the 200-week moving average since going all the way back to this day in August 18th, 2014. That's a month. That's a month ago, or nearly a month ago, that we've been above the 200-hour moving average. So the first test today of that 200-hour moving average, the first serious test of that 200-hour moving average, found the sellers against that level. That keeps the market still honest until next week, when we make up our mind whether we want to stay above the 30 level and move higher, in which case we got to get above that 200-hour moving average, or stay below this 200-hour moving average and move below the 30 level and continue the trend back to the downside. That's what we're going to be looking for in next week's trading. The lines are there. The technical levels are there. You're already, a part of trading is being aware and being prepared. You're prepared.